As Israel goes to war with Hamas, global markets are becoming increasingly unsettled. Oil prices have started to soar on Middle East tensions. Extremely negative events like this typically fuel a flight to safety. Oil is highly geopolitically sensitive, and the dollar is seen as a flight to safety. War is an absolutely shocking thing. The negative effects ripple through not only people's lives but inside financial markets as well. Unfortunately, the dreaded C word is on the rise again as well. Many people are saying that masks are not effective. Well-fitting masks are effective when worn consistently and correctly. Rates higher for longer are hitting margins hard, and profit warnings are to hit the S&P 500 as those high rates pinch consumers. We are going to see how all of these things are impacting the markets. Remember, there is always bad news inside financial markets. It's just a foundation. Economic cycles are always moving in a wave, just like price does. Globally, there are a lot of people going through life pullbacks at the moment. Our love and healing thoughts are with you. In the past trading session, we saw the US markets absolutely rallying up. Now that rallying has become quite subdued. War breaking out is never good for anyone, and it's not good for financial markets either. Zooming in to the S&P 500 futures just over the past couple of days, we can see that big rally came through and now the futures are coming down. They're pulling Bitcoin down with it. Bitcoin is at a crossroads. It is like digital gold, but it is also a risk-on asset. One thing that we do notice, the ASX 200, it's coming down, and we would expect this because war is not a good thing. The US markets on Friday closed out very nicely, especially in the tech sector. But today is a completely different day. We can look at the crypto market and gain a perspective on what the main markets could do when they open. And the ASX, the Australian market, is already showing us the way. We've seen the S&P 500 and the major indices futures coming down. Bitcoin cannot escape the stock market's gravity. It is coming down as well. But there are always inverters inside the crypto market. Keep your eye on them. The Hamas-Israel war will undoubtedly cause shockwaves throughout global markets. It's a great shame as everything was starting to turn around, but now it looks like negative price momentum may re-enter the markets. It's good to be prepared. Unfortunately, a lot of people don't understand that the stock market dictates the crypto market's gravity, and we can see that very plainly and very clearly here. We can see that the S&P 500 futures, it's going down at the moment and it's dragging Bitcoin and total crypto market cap with it. The NFP report, the non-farm payrolls report, was just a blowout and it sent yields soaring and then they decayed. But one thing that we know, because we look at the structural levels inside the market, the S&P 500 and these levels are marked up since 1871. They're not recent indicative price action because that will RIP your money. We can see that we're getting into some very heavy structural levels. To get a bit of a pullback from here is absolutely on the cards and would be expected. However, the Israel-Hamas conflict could add fuel to this fire. One thing to look at, there are always opportunities inside financial markets, and when we look at gold, gold is a safe haven asset. Bitcoin is becoming that, but it's still a risk-on and risk-off asset class. One day it will be digital gold, there is no question of that. But for now, it's more a risk-orientated asset class. We can see that gold has jumped up. We're going to look more deeply into the gold chart. Understanding structural support and structural resistance levels is really important. We saw when the NFP report, non-farm payrolls, came out, the DXY, which has been marked up since 1967, I'll pop the indicator on shortly, but the concept is it rallied up and then it retraced. Why did it retrace? Because it hit strong structural levels and couldn't maintain a positive dimension. We've seen the DXY find a level of structural support around that 106.0812 level, and now it's jumped up with the Hamas-Israel conflict. If the dollar continues to gain strength as a flight to safety, we would expect that the DXY come up and challenge this light structural resistance level at 106.4349, but more likely head to the 106.7130. Price is always moving in a wave, and nothing is ever guaranteed inside financial markets. That's why we look at probabilities. If we can't maintain this positive dimension in the DXY, we're heading back to structural support at this 106.1289 level and the 106.0812 level. If we can't hold on to that, we're going below. This is always the way of structural levels. However, the probability is to an upside movement. When the NFP report came out, the US 2-year yield absolutely spiked up, encountered structural resistance and backed off, just like the DXY did. We can see it's starting to cut over. It's a little bit undecided whether the US 2-year yield will go up or not, but it is expected. The US 10-year yield is really important to keep your eye on. When non-farm payrolls came out, printing a hotter than expected employment number, a way hotter than expected employment number. This means that the probability of the Fed increasing interest rates and staying higher for longer was getting backed up. There was a big surge in the yields and also the DXY that we saw got faded, but it's now starting to recover. And what is happening in the Middle East is helping to raise yields as well. Geopolitical instability is a big problem inside financial markets. When we look at US oil, we can see US oil is jumping up. This is a geopolitical instability play. When it comes to understanding oil structure, and that's been around since 1861, normally I would turn on the indicator, but what I want to do is a little bit different today. I want to show you the major levels that you must be aware of. One of the things that people inside the service know, there was a tremendous amount of structural support underneath oil's price at this 82.03 level. Now oil has jumped up. There's a level of smart money structural support at that 85.86 level. There's also the next incoming structural resistance level is 88.14, and it's relatively strong. And from 90.31 upwards, there's a tremendous amount of upward structural resistance. So just keep your eyes on these particular levels. They're going to be gold for you. We would expect positive price pressure on gold, and when non-farm payrolls came out, because the yield spiked up, gold spiked down. The DXY also spiked up. This is a perfect opportunity to explain why prices and charts can go out of alignment with each other due to external events. Gold is seen as a safe haven play. In times of turmoil, people put their money into gold. In the future, they will put it into Bitcoin. Digital gold is coming, but it's not really there right now. It's more akin to the following of the stock market. And we can prove that out by charts, as I did earlier. The concept is yields could rise, the DXY could rise, and gold could rise as well. This is really important to understand, because where is gold trading now? You've got it. It's jumped up, and that's exactly what gold does in times like this. Normally, I would turn on the CTKS method, monthly service indicator, but I'm going to do it a little bit differently today. I'm just going to show you where the structural levels are. At 1851, we have a structural level on gold. And members of the service, you would already see this playing out. We've got a higher one above at 1857, but we've got a bit of a fresh air gap up to 1872. What this means, if gold can get above that 1851 level, it's heading to 1857, but it's strong resistance, strong structural resistance all the way back from 1833. This is not recent indicative price analysis. Our channel, our community does things that other people don't do. If we get above this level, we're heading towards the 1872 level. If we can't get above the 1851, we're heading back to structural support at the 1840 level. If we can't hold this level, we're going back to 1824. However, the positive momentum case is the most probabilistic at the current time. It's very powerful to keep your eye on the Forex pairs. When we look at the Dixie, the DXY, we saw that it rallied up and then got faded. You notice the opposite behavior inside of Bitcoin. That's that blue line that's behind all of these Forex pairs. What we're seeing now is the DXY starting to rally up. We can see that the euro dollar is starting to come down because the DXY and the euro dollar move inversely to each other. The euro dollar tends to move in alignment with the Aussie and also the Kiwi and the Great British Pound, which is called the cable. Keeping your eye on the DXY and the euro dollar is a very, very good idea to try to understand where global financial markets could. Financial markets pay for understanding. When you understand how all of those charts are moving in alignment with each other, you get into a position where you can literally position yourself for profit. Otherwise, everything seems very confusing. It does take a bit of time to get there. We can see the crypto market just currently is red. We would expect this as the futures are selling off. There are always opportunities inside every market. The greatest gainers in the past 24 hours, top 100, LDO, Clayton, Tether Gold, Chainlink, Rune, Pax Gold, Multiverse X, EGLD, and Algo. It's not surprising at all that we see two gold pairs actually make their way into the top 24-hour percent gainers. Always remember, price is always moving in a wave. The greatest losers, top 100 past 24 hours, AVAX, BSV, MNT, Leo, ZEC, ARB, GMX, and Bitcoin Cash. Over the past 24 hours, there's been 32.52 million in total liquidations. We can see the majority of those liquidations are long. Long liquidations push the price down. They're represented by these green areas. Conversely, red are short liquidations. That is witnessed by price going up. One thing to note, these liquidations are very, very low. Inside the crypto market, no alt can escape Bitcoin's gravity. What is Bitcoin's gravity? It's that blue line you see behind all of these charts. When Bitcoin surges up, it will pull the alts up with it. When it surges down, it will push the alts down with it as well. This is just the way the crypto market works. Fortunately, we can find inverters, but the inversion doesn't stay forever. That's why we talk about gravity. We can see that as Bitcoin has come up, the alts have done rather well, but not all of them. With the exception of Solana, which is absolutely mastering it at the moment. And that's making a lot of people inside our community very happy. Structural support and resistance levels are very important to understand, and when we saw the non-farm payrolls come out, we witnessed the yield spike, the US 2-year, the US 10-year, the DXY. That created negative price momentum inside the stock market and dragged Bitcoin down with it. But as those rallies got faded, we saw the S&P 500, the major indexes, and Bitcoin and total crypto market cap absolutely recover alongside the stock market. What we need to keep our eye on is what is happening next. We've just literally come into a structural smart money buy level at 27,827. If we maintain positive momentum, the next structural sell level is at 28,430. There's one below it one above it at 28,602. If we can't get above here, we're coming back. If we fall below this 27,827 level, we're going down to 27,237. The potential probability is on negative side price momentum, unfortunately. That's provided that the DXY keeps on rallying. The market loves to wrong foot the mass audience. If the DXY dips down and collects all the longs before it shoots up because it's pulled in all the shorts, these are things that you have to be aware of. The key understanding, price is always moving in a wave. If you understand this, you can understand that an uptrend can have a down wave in it and not be thrown out because it goes down. You may just accumulate, but you just have to be aware of what price reality is actually telling you. One thing to keep in mind, when you get a loss, which is an unexpected negative outcome, you can handle it in two ways. You can handle it through your anger and your hurt, which will unfortunately enter you into the doom cycle. This is this red area. Or you can do and understand the insight cycle, which is all about awareness and understanding. Financial losses in financial markets are the tuition fee. The key is to start small and scale. That keeps the tuition fee very small as you gain your knowledge and experience. Going all in and more, the market will probably teach you some very harsh lessons. But this is normal and we all get taught those lessons. In fact, to enter the professional side of the market, you often have to get burned to the point where your emotions don't feel losses. The key is always to learn, is to own whatever happened. Learn from it so that next time you get in front of it. The natural reaction, however, is to just reach out and blame everything and everybody around you. And this is very normal, but it doesn't make you money and it never will. It actually just compounds your losses because instead of dealing with one problem, you're now dealing with probably 10 or 20. However, in the insight cycle, you only focus on the lesson that you can learn from the loss. You don't create any other problems to go with that. You empower yourself because you say, what did this teach me? It takes about a decade to get to this level to look at the doom cycle versus the insight cycle. In the first couple of years, everybody is talking about certainty and Lamborghinis and retirement. Very quickly, people understand that this is just pure fantasy. Financial markets are just like anything else. You have to put in the hard work. That is, you have to be aware and have understanding of the rules of financial markets. If you turn every loss into a lesson, you're examining the lessons, and that will ultimately make you consistently profitable. Always remember to analyze especially the structural support and resistance levels across your Tier 1 charts. They are vital to understand. The doom cycle will always try to pull you in. But if you get pulled in, you know what's coming, doom. Instead, you need insight. You need understanding and new rules. You can't change the past, but you don't have to fall for things in the future. You can't fix things, but you can fix how you react next time. That's why we always say with the CTKS creed, I am dedicated and committed. I win or learn and never blame. Blame is the #1 disempowering activity that people all around the world do. It creates conflict, it creates wars. Instead, inside our community, we seek to solve our problems with positive excellence. Because we don't want to enter the doom cycle. It's far, far too expensive. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.